Welcome back to Nova Scalper Traders. Today we're going to uncover a secret that large institutions, also known as smart money, often leave behind on the charts, that's order blocks and fair value gaps. These two concepts are becoming increasingly popular and are used by many traders, especially scalpers, to read the market and trade alongside big money flows. So, what are OBs and FVGs, and how we can leverage the footprints of the wealth to profit? Let's find out now. First, we need to understand what smart money is. These terms refer to central banks, large investment funds, and giant financial institutions. They have the power to move markets with enormous trading volumes, and when they place orders, they often leave footprints on the charts that we can identify. Two of the crucial footprints are order block and fair value gap. First, order block. You can think of this as price zones when large institutions have placed a significant amount of pending buy or sell orders. When the price returns to these areas, it's very likely to react strongly as those pending orders are triggered, or they aim to protect their position. And fair value gap, also known as an imbalanced price gap. These are price zones where the market has moved too quickly, creating an imbalance between buying and selling pressure. Smart money tends to pull price back into the FVG areas to fill the gap, re-establishing balance before continuing the main trend. So, how can we as scalpers spot these footprints on the chart, especially on smaller time frames like 50-minute or 5-minute? For order block, let's identify strong price zones. OBs typically appears at a significant market reversal point by the large counter-trend candle. A bearish order block is often the last bullish candle before a strong downward price move. Conversely, a bullish order block is the last bearish candle before a strong upward price rally. The order block zone is strong from the open to the close of that candle, or it can extend to the wick. And next, for fair value gap, look for 3 consecutive candles. An FVG is created by a gap between the first and the third candles in a sequence of 3 large body, same color candles moving in one direction. This gap shouldn't be touched by the wick of the middle candle. This is the price area where no trading occurred, creating an imbalance. So, once we identify deep zones, how do we scalp alongside smart money? Firstly, use order blocks and FVGs as potential support and resistance zones. When the price returns to a previously created order block or FVG zone, there's a strong likelihood of the price reaction. These zones are often much stronger than conventional support or resistance levels. Secondly, combine them with scalping confirmation signals. Don't just enter a trade immediately when the price hits an OB or FVG. Wait for additional confirmation signals from your smaller time frame, such as reversal candlestick patterns like pin bar engulfing, indicators divergence like RSI MACD, or a market structure break on the 1-minute time frame. And this is a real-world example for you. If gold is in a downtrend and created an FVG during a sharp decline, then the price retraces and touches that FVG zone. We will wait for a rejection candle or bearish reversal candlestick patterns on the 5-minute or 1-minute time frame as this fair value gap zone to enter a sell trade. The same applies to order blocks. In summary, order blocks and fair value gaps are not just complex concepts. They can be effectively applied to scalping. By identifying the footprints of smart money, you can increase the accuracy of your entry point and trade much more intelligently. And if you found this video helpful, don't forget to like, share, and subscribe to the Nova Scalper channel. Happy trading and see you in the next video.